Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope I am audible to you. Let me display the PowerPoint presentation. Asian Session Live Market Analysis for this particular week, 18th to 22nd of June. And we are having the webinar on 18th of June between 5 and 5:45 GMT. So as usual, we will try to review the market with three objectives, namely the derived forecast, what it says, the forecast which is derived from my algorithm. So that is being posted in my blog, iknowindices.com/blog, and also I am giving it on Monday, what could be the expected market moves for that particular week. Then followed by that, we will use the market reading technique. This technique is very simple. So we note down the initial low and the high set around 3:30 GMT in 4 majors and 2 commodity pairs and use them as the reference levels for the day, because that's how the players do it. And we try to identify the type of moves they do it in the market, whether they make an upward stop and above that of the high and come down, or they just breach the high and stay above for more than 2 hours, 30 minutes, and continue to rise for 2 hours as an extended move, or rise throughout the day or 2 sessions and part of the 3rd session, and then start reversing it as an intentional move. Either on the upside or on the downside, they continue to gain the momentum that way during the day. And also, when they make the type of moves, they do it in specific sequence. That is, if they make an extended downward move for 2 hours, then they try to make a swing to that of the high, and then try to breach the high slowly and go up for 2 sessions and the start of the 3rd session as the intentional move. So the intentional move and the extended move alternate during the day. Because of that, the spread between the high and the low get extended during the day. And there might be so many stories, so many data release, and so many other news or attributes to that market moves. Ultimately, the players make the moves alternatively, the extended move followed by that of intentional move and again extended move, and in between they make the stop-ins and the swing. So stop-ins could be seen during the session start time and session close time, and false move could be seen during that of the gap time. They may just pretend as if they are going to drop and come up to that of the low and then continue to rise in less than 30 minutes, or they could make the swings during the mid sessions. These are all the type of moves one need to identify, and then we understand in what sequence they are trying to do it. And if you track it properly, you'll be able to identify plenty of trading opportunities in the market. Market continues to give the trading opportunities. As a smart trader, you should try to enter and exit into the market as quickly as possible and try to see that the profit is grabbed. For that, you need to identify the quick moves happening in the market. If they rise quickly, then understand whatever they bought, they try to gain the levels quickly and book profit. So during that time, we can do a buy and sell trade. If they quickly drop and understand that they are trying to keep below that of the initial low and then start making the slide, we can do sell and buy trade. And we have to identify in what way we can try to do the trades and quick moves or false moves in the market that we need to understand. During such quick moves, if you try to enter into that other market, then you will be able to quickly earn profit. But if you assume that there could be a big drop and try to sell closer to low, then we might be trapped. If they breach the low and stay below, then we can assume that there could be further drop. Similarly, if they rise above that of the high and stay above there for more than 30 minutes, then we can assume that they can make further rise. But before that, if they come to that of the high, if you try to take a sell position, if they make a stop-ins, you will be stopped out. So when they make such stop-ins, you can try to take a sell, then you will be able to easily book profit. during that market move. So for that, the market timing is very important, and we try to track the market using the GMT time frame so that throughout the day we'll be able to track the market with one time frame or one type of time, not our local times. Then whatever the type of reading we do, whatever the type of forecast we try to derive it, still the market can make unexpected moves or it can go against our expectations. And we need to necessarily limit the risk. And for that, we have to invariably use trading strategy of limiting the risk by keeping the hedging order or the entry stop in a loss-making position. As soon as the position is taken, we have to keep the hedging order 30 pips away from it, or a stop if the hedging facility is not available. And if we like to have the hedging still, when the hedging facility is not available and the equity is very good, then probably you can identify a pair wherein a similar net change is formed, wherein the same currency is in the numerator or in the denominator, then try to use it for the hedging purpose. That way you can try to limit the risk. And once the position makes profit, we have to keep invariably the stop at entry so that we don't incur any loss in case if they hit the stop at entry. Then we continue to identify the next opportunity. But if you try to keep the position without the stop at entry, then when they continue to drop, you tend to go in for averaging. And in that process only, many people get struck in the market because without understanding that they are accumulating more positions, and later on when they make one more drop, then it leads to over trading. All the positions start eroding the usable margin. As a result, the margin call fear comes. So if you are a disciplined trader, then try to use the hedging order to limit the risk, and also try to take only one position at a time and try to focus on it and try to book profit. Then later on think of another position, because market continues to give plenty of trading opportunities. There is no hurry at all, and if you wait calmly, you will be able to see good opportunities emerging again and again. So if you have that mindset, then you will not feel that you have missed an opportunity. You will wait for the next opportunity and try to take the positions. And that way, if you change your mindset and your emotions will not be triggered, ultimately the emotion is triggered either on the greed side or on the panic side only if you do the over trading or you intend to do over trading. Try to take about 10 lot position aiming to book 20-30 pips profit, but they may show 50-60 pips loss. Then you realize that you have done the over trading. Only after seeing a big loss you realize that you have done the over trading. A wise man will avoid taking such big positions so that there is no panic conditions in the market, and nobody will be able to tell you that you come on close the position. They can only give the forecast that euro can drop, GBP can drop endlessly, but they cannot come and close your positions. So your positions, you close it because of your fear. So that you need to understand, and you have to hold responsibility. When you hold responsibility, you have to see that you are not in the process of taking unlimited risk. So always try to keep the hedging order if the facility is available. Otherwise, the hedging in a cross wherein a similar net change is shown, and or simply use a stop to limit the risk. And if the stop is very tight or optimal, about 20-30 pips, then you will not mind losing that money and review the market to enter back and try to earn. But if you keep a stop of a wider range like 70-80 pips or 130 pips, then if they hit your stop, there will be sizable erosion of the usable margin. That can act as the fear creating trigger for you. Then you become abundantly cautious before entering into the market, and when the great opportunity comes, you fail to recognize it. When they start moving it, you become a late entrant. Then later on you see that you have just taken the buy position after the full rise. So this again happens once you become abundantly cautious. And so in the market, quick decisions are very important. The quick-wittedness is ultimately rewarded by the market. So with regard to that of the initial lows and the highs set, Euro formed the low 1.2673 and 1.2748 was the high. They are not breached the high or the low, and they are staying in the middle level around the psychological level 1.27. And on Friday, they just made the drop initially and created the fear, and then subsequently started gaining the level. And in the European session also, it was uh, just making a lackluster move. And during that of the US session, initially they gained the level and subsequently they did not gain the level during the mid-year session. So many thought that they may not make any big rise, but the players have got their own agenda, and before the next uncertainty grips them, they want to capitalize. So before the outcome of the Greece elections, and they wanted to gain the levels and quickly book profit with regard to their buy positions and try to hold at the higher level so that the traders will become very, very uncertain whether to take a buy after the rise or whether to take a sell position. And when they want to take the sell position, because already they have suffered by taking one sell position that is making loss, and if they average, then it may lead to over trading. So traders avoid taking positions, and in thin volume conditions, the players make such quick moves in the market and try to trap the traders on either side. So ultimately, we only call euro bullish, euro bearish, and things like that. For them, it is trapping on the downside and trapping on the upside alternatively. Nothing more than that. It is not bullish and bearish for them, and they are least bothered whether euro is trading around 1.26 or 1.32. Ultimately, they see that they are able to earn consistently money from that of the market by trapping the traders. If the traders think that it is very cheap and buy, they drop, and show them that become expensive. Then they liquidate. Then later on they gain the levels, and the trader feel that, oh, I could have held the position just to come out without a loss. But next time if he does, they do the similar thing, drop, and then gain. So we need to ultimately see that we outsmart the players. There is no other way than to outsmart the players. But we don't have enough money power to fight against them. So we have to use our intelligence and try to conquer them. That is the only possible way. Then in the case of GBP, 1.5692 was the low, and that is not been breached, and 57.42 was the high, and that is also not breached. So they are within this particular range making the swings, and most of the currencies are in the middle level, and they are trying to just hold the market for the volume to get improved. And in the case of yen, you know that along with that of euro and GBP on Friday, they made that drop, and thereby yen crosses came down, and subsequently you found that yen, USD yen, they made further drop below that of 79 and gained the levels in the case of euro and GBP. Normally they used to give it such a type of push in order to give trigger for euro and GBP to gain the level. Afterwards they gain the levels again in the case of USD yen. So this is the type of play they try to make it, and they simply create the market sentiments and act against the traders that we need to understand. And they use all attributes happening around the world, that the news and the events, to their advantage. Then USD CHF 94.23 is the low and 94.78 is the high, and there again they are not breached the high or the low. Canadian dollar has come to 1.0192 and the high was 1.0217. That is also not breached. And Australian dollar 1.0091 is the low, 1.0135 is the high, and it is also in the middle level. And you find that In the case of Euro, they have shown the new high, and in the case of GBP Friday itself, they gained the level up to that of 1.57. They are holding it, and in the case of Australian dollar, they have shown the higher new level, and that way invariably create the bullish feel for the traders. But ultimately, we need to understand why they gain the level when there is so much of uncertainty gripping the market, because market is different from that of the actual things which are happening in the market. Now, with regard to that of the expected market moves for today and the week, so today swing and slide moves are expected during that of the Japanese session, and a firm up move could be seen, or a brief stop and could be seen above that of the high in some currencies, and later on they are expected to make the slide as the week beginning involves move. Then swing and firm up moves could be seen during that of the US session. So you might be wondering, when the market has gained, I am telling that it is expected to drop. When the market is dropped, I am telling that it is expected to gain. But I am trying to give only the forecast, what is expected to happen in this particular market. And with regard to the rest of the days in the week, on 19th, you could come across low gains in the case of Euro and GBP, and then on Wednesday, there will be an initial downward stop and followed by that of that upward stop and during that of the US session as the midweek. And on 21st and 22nd, they are expected to aggressively gain the levels in the case of Euro and GBP and take it to the new highs. Then all will turn bullish in the market. So people might be wondering, is it due to Greece outcome or any other trigger and things like that? And these triggers are used as only attributes by the other players, and they can simply say that it is already priced in, or it is already discounted, or whatever it is. And ultimately their explanations are nothing but excuses, and they make their moves according to that of the pending positions of the traders. The traders jump into the market after the rise, they just drop. And if the traders try to sell technically that it is going to drop, they rise the market again, induce them to do a short covering. Whenever they make the quick rise like this, the first people to come and buy in the market are the short sellers. They do the short covering. And later on they find that the market is not dropping. Then they try to turn long, thinking that they have breached the resistance and gone above and staying above. So further resistance is still higher side. So we'll do a technical trade of buy and sell after the rise. And they may gain a nominal level of 10-20 pips. And if they fail to keep stop at entry or just book profit, they make a drop again, induce them to liquidate. And when the traders think that it has breached the supports and it's going to fall, then they try to take the sell position, they gain the levels. So ultimately, they induce the traders to follow technical supports and the resistance derived by various types of calculations and try to trap them. And that is the main reason that I say that avoid using extensively the technical trade, not because I don't have trust in them. The players try to trap the traders if you blindly follow the technicals. And that is why you find that many of the people combine the technicals and fundamentals. And there again, fundamentals can say that there is an uncertainty every 3 hours to 5 hours in the world, in different parts of the countries, or in different parts of the world. So there might be a specific approach, a pessimistic approach with regard to the fundamentals. But with regard to technicals, we may turn bullish and bearish and find the retracement and also the supports and the resistance are moving high, and the higher lows they have formed and higher highs they have formed, and you try to do the pivot points moving upward and things like that. They simply trap us. So ultimately we have to understand that the only way to understand the market is read their intentions, because it is a man-made market, and with the help of the money power they can move the market on the upside or the downside, nothing more than that. and we need to find out with the help of the type of moves whether they intend to make an upward move or a downward move. A simple concept in money market, they have to act cunningly before us, and later on they have to act differently. It is something like you try to take a loan from that of a bank or anyone, and you try to go there and show all the papers, and they respect you like anything, and they give the red carpet welcome and give the loan, and once you fail to repay, they show the other face. So that is the way the money has to be made. So in the market, you find in the financial market, when they want to make money using money, the only way is cunningness. So identify when they are making stop-ins, when they are making false move, try to enter into the market, you will be well off with a quick trade. Let me minimize the PowerPoint presentation and try to answer the questions which are asked here. Meanwhile, I'll focus the camera over that of the live market code page. Let me explain to you what has happened in the market now. Euro is trading around 1.2710, 72 pips already they gained net change. You know, in a given day, they can gain only about 150 pips, you know well. So quick moves or false moves in the market. And in the case of USD yen, 49 pips positive net change is seen already along with that of euro. It is a contrarian move. And GBP is 12 pips negative net change. This is mainly to gain the levels in the case of euro GBP for the weak weakening as a false move, and later on they are expected to dump it again. Then in the case of CHF, 55 pips negative net change is seen when euro has gained about 71 pips. So lesser drop in the case of USD CHF. So we can understand that they do not want to drop more USD CHF. Then Canadian dollar, just 7 pips negative net change when Australian dollar is making 38 pips positive net change. Again, they do not want to drop Canadian dollar in a big way. So as a result, you come across that the crosses are very active. Already euro yen has gained about 114 pips. You can understand how on Friday and Thursday and Friday how they have been keeping it below that of 100, came down to 98, and then subsequently gained the levels. Then in the case of euro GBP, after reaching 81, they dropped it again. They are coming to 81 just to build the sell positions in the case of euro GBP, and later on they are expected to let loose. Right. With regard to the regional currencies, here you find that USD INR, it is trading around 55, 34, 35, and 33 is the low, 44 is the high. Because of euro gain, you find USD INR has just made the slide, and it is a weak beginning move, and later on they are expected to gain to 56 or 55, 75 and things like that, and then later on continue to drop during this particular week. So these are all the expectations based on the forecast. So let me answer the questions which are asked here. So no questions here. Is there any question you'd like to ask so that I can answer to those questions? Because I don't find any questions. So probably you don't have any doubt, or you have not understood my talk at all. There are two possibilities when the question does not arise. Then PT. Do you still forecast 1.49 euro USD by year end? I'm expecting euro to at least go to 1.41 in 2-3 months. And they are expected to gain aggressively. And you know that once they come out of the lows and consolidation, lower level consolidation, they try to go to the middle level very quickly and do the middle level consolidation with a stop ends. You know, the lower level consolidation with a frequent downward stop end we have already seen, and they are trying to reach the middle level, and they will try to do either way stop ends alternatively, and then quickly gain, shift to the trading zone to that of the higher level. So the process has just started. They have to go to the middle level, they have to go to the higher level. That is how you find 1000 to 1500 pips spread is seen in a particular season. So if you think that it is impossible, that means you are not understand the whole cycle in the market. No, they make at least about 1000 to 1500 pips spread between the low and the high of a season. And earlier, I remember that they used to make it about 2000 to 4000 pips spread between the low and the high in a particular season, but it has come down drastically because of low volume. And they do prolonged lower level consolidation. So then they waste a lot of time in that because they wanted to see that they make money. So for that, what they have to do, they have to make the traders to addict to trading. That is showing a range for a prolonged period. So once euro comes to 1.26 and goes to 1.2450, again 1.26 and 1.2450, then the traders think, okay, when next time it comes to 1.26, let me sell. Then they trap and take it to 1.27. It takes such a long time for them. That is the reason. Then check out. Your focus for euro and GBP already attained target of 1.27, 1.57. What about the week? They are expected to gain further levels. These are all the levels that they are supposed to reach a short time frame. And again, further higher levels are expected. As I explained, that they are trying to shift the trading zone to that of the higher level. But before that, they are expected to make this sort of moves. No prolonged consolidation in a range and then try to make it downward and the upward stoppings. And when they do the middle level consolidation, the spread between that low and the high will be about 300 pips. And upward downward stoppings might be about 100 pips. So in a 500 pips range, they are expected to make the swings here in the middle level after gaining it. So they may straight go to 1.28 and then start making that sort of middle level consolidation before taking to the further higher levels of higher level consolidation with the upward stoppings. Then Shan. USD CAD, will it test parity before? No, it may not. They are trying to just hold it with a lesser negative net change when compared to that of Australian dollar. You might be able to see that, and soon they will take USD CHF also above parity, and because of that they are making lesser drop. And whenever euro and GBP make about 50-60 pips drop, they will just gain about 100 pips in the case of CHF and compensate it, and also in Canadian dollar. So all are in the upswing, but invariably you will find the alternative moves, and you find the contrarian moves are continuously happening. Euro positive net change and USD yen positive net change, euro positive net change, negative net change in the case of GBP. These are all the type of contrarian moves, and that is the way they can handle the cross. Then Kanan. On Friday, euro stayed above that of the initial high for half an hour and reversed just like that. So they did not reverse it on Friday. You know that they made an upward stop and then made the drop to hit the stops on the lower side before making further rise. So you have to differentiate. If you note down the time carefully using the GMT time frame, you will not miss reading whether it is an upward stop and or whether it is an extended move. In CSW, can we expect this week that euro and GBP will move about to 1.3 and 1.6? Yeah, there is a great chance to move up to those levels in this particular week, and I'm expecting them to make aggressive gains. So in a week they can gain about 350 pips in euro, 600 pips in the case of GBP, but nowadays they are doing only about 300-400 pips in the case of GBP also. So there is a great possibility to reach 1.30 and 1.60 these two currencies. Then AD. What is your view on the lunar cycles determining the turning points? No, I don't trust in all those blind concepts of lunar cycles or the solar cycles or whatever it is, because we don't have scientific evidences pertaining to that. And basically, what I do is derive the electromagnetic impulses coming from various planets. And when they come straight on the Earth's surface, they don't influence that animals. Only when they come in a tangent way, and only when they refract, then you find that they influence the endocrine system and make the human being to become panic. Not only human, even the animals become panic at that time. And the lunar cycle, as far as it is concerned, the new moon and the full moon days, you find the intensity of electromagnetic impulses become higher. And in that process, what happens? The lunatic people, that is why they are called lunatic people. From the word lunar, it is derived. The lunatic people or maladjusted people, they become more aggressive. But normal human beings are not affected that much. But when the waves or the electromagnetic impulses come at an angle and pierce through that of the troposphere and come to that of the Earth's surface, then they trigger the pituitary gland as an extraneous stimulus. Then you find such events happen in the market. But it is a very, very debatable topic, and a lot of research has to be done and things like that, and a lot of placebo experiments are to be conducted in order to find how influential it is. But we can theoretically talk about so many cycles. But the planets have got telling effects on human beings. There is no doubt about it. But we have to find out what part of that particular planet are influencing, whether it is a simply magnetic force or the electromagnetic force or any other phase effect. So according to my study, only the phase effect has got an influence. All others are not having much of an influence in human decision making. Then engine. When will you do a summary of the half year of forecast? Anytime soon, I'll try to do it. It is the month of June. 6 months gets over. Probably by next month, I'll try to convert one of the webinar into recalling the forecast. Then shares. Australian dollar, I feel it may lose steam beyond 1.20 at the weekend start and the downward. According to me, Australian dollar, according to my algorithm, Australian dollar is supposed to gain normally further up, probably to 1.04 to 05 before making further fall. Pico, do you expect the volume increase during this rest of the year? I doubt very much whether the volume can increase in this particular year. See, in a trading cycle, it is a different cycle. Besides the market cycle, it is like a trading cycle. So I can just compare it with that of the prey-predator interaction. So the predators, they just chase the prey and try to deplete the population of the prey. They try to feed on. So you find, say for example, lion is trying to chase all other the ungulates or like a deer or other animals. Then the population of the prey gets depleted. And once the population of the prey gets depleted, then the predators starve or take only half meal and allow that particular prey population to grow and multiply during the next season, the breeding season. And during the breeding season of the prey, they don't hunt, especially the female pregnant bees, they don't attack. So they try to see that the population propagate. Then they are assured that the next meal is available for them. Even though you think that these animals do not have intelligence, they have got enormous intelligence, and they try to try to see that the prey is sustained. And we human beings, we do not know in 2020 or 2030 whether we will get our food. We are not planned ourselves. Whereas These animals are planned very nicely, and for time immemorial, they are keeping their prey alive. They don't make the prey extinct. So, in a similar condition, the predators, especially the players, could wait for the traders to make some money and enter into the market, and the volume increases. Then they'll go in for the multi-year trend reversal and grab all that. In CSW today, it is good to sell, buy trade in euro. Yeah, you can do sell and buy trade in the case of euro only when they are making an upward stop above that of the high. You just watch it how they are handling the high. See, the forecast says that the currencies are expected to drop, and it may be only pertinent to GBP. Sometimes they may simply drop GBP to create the market sentiment and hold euro. So you have to identify the currency in which you can do the sell and buy trade. So not simply using a general rule. You have to find out the type of moves in each currency and then try to take the decisions. And you know one thing, that when they are making contrarian moves, the moves will be much limited. Let them do USD gaining or the USD weakening move and then try to take the sell or the buy position. You said it is uptrend in the market for euro and GBP, but now you inform that building sell positions happening. No, uptrend is a long-term trend, Mr. Kannan. What I was telling is whatever they bought the last week, they will try to book profit and lighten their positions. Only when the players lighten their positions, they can buy above that of 1.27, 1.28 and things like that. If they are simply holding the positions, market cannot move on its own. They have to move the market. So they just gain quickly the levels and book profit, lighten their positions. Then the usable margin is available for them to take further positions. Without dropping the market down much, they take it only up to that of the low or make a downward stop and then quickly gain the levels. Always the quick moves or false moves in the market, what they do? They buy less and gain more levels. Because has anyone placed a sell order at 1.28 at the current time? No. You know very well that when the market is here, we will only keep an order closer to that. And probably if I got a long position, and technically we may just calculate, and it may go up to 1.2880, then probably we may keep 1.2870. One or two traders or a few traders would have kept the limit orders. All others will try to take the market positions. So when they quickly gain it to 1.28, hardly they would have taken about 100 lots buy positions, but they gained 100 pips. So it's the trick of the trade. Then house. Australian dollar month-end forecast. Australian dollar could go up to 1.05. Then what is middle level and how to find out? Middle level between the low and the high, the middle level is 1.27 or 10. That is what I said as the middle level. They are simply holding it. I'm not giving any sort of analysis which is very complicated. You require a calculator and things like that. Just by look at it, you will be able to see that. So that you spend less time on the analysis and more time you use on the trading strategy and try to see that you fine tune your entry. Suppose you want to buy it at 1.27, then keep 10 pips below the market, the buy order, and see in 30 minutes they are able to fill it. So you fine tune the order that way. See whether you are in the late session or in the early session. Only during the early and the late sessions they handle the majors, and mid sessions they handle the cross. So these things you have to keep it in mind. All things should work, and that is why I'm just straight away giving it as the concepts and the statements. And if you remember all, you will be able to trade fearlessly. Then DT. What planetary squares do you believe are most impact on the currency market? I have not done much of a study with regard to the planetary squares and things like that, sir. So I am not a competent person to talk about the astrology here. Then Rom. Uh, Even light from sun is an electromagnetic radiation. Electromagnetic impulses are in the form of electronic particles. Why you choose only other electronic radiations? See, you find the light photons are different from that of the electromagnetic impulses. They are refractive substances. So on the planet surface, the sun's photons get refracted and later on they come to that of the global surface. Because of that, we find the visibility of such planets. So let me not go into that of the details of that because it may be irrelevant here. Then chance. By not making 300 or 600 pips in a day in euro and GBP, are they trying to bring down the volatility forever? No, it is not like that. They try to keep the volatility in an optimal conditions so that the traders try to do the swing trades and also they tend to trade without a stop. So they have to make them to do wrong trades. So when they want the traders to make wrong trades, they have to give profit in initial trades. Only then the traders commit more positions and overtrade without their knowledge, and then they are trapped wrongly. So never give a chance for overtrading, then you will never get trapped by the pulling act of the players. So let me go back to that of the PowerPoint presentation. So the expected market moves, swing and slide moves are expected during that of the Japanese session. Firm up and slide are expected during that of the European session. Swing and firm up moves are expected during US session. And week beginning false move may be curtailed to that of the European session today on the downside. And such times can be buy opportunity, but the trend is up, keep it in mind. And they could make the upward trending moves in this week like last week, and they may extend the downward move if needed till tomorrow like last week. Otherwise they may just finish it in first day if the outcome of the grease is let known, and then later on they are expected to gain the levels in this particular week, and we could see very soon some more higher levels in the case of euro and GBP. So the initial high and the low, they are not breached, but the spread is really high for the start of the day in all the currencies, indicating that they wanted to make aggressive moves during the day. So I'll be presenting Tracking the Market Together webinar on 20th of June between 8 and 8:45 as a first part and 14 and 14:45 as a second part. So both the sessions will be 30 minutes after the start of the webinar, start of the session. So we'll be doing the basic trading strategy. And those who wanted to know how exactly the trading strategy has to be applied, then you can attend this particular webinar. See, in this Asian session webinar, I am giving only the forecast and also the market reading. But I'll explain more in detail the trading strategies during this Tracking the Forex Market Together webinar. And on Thursday, 21st, the next day, I'll be again presenting live market analysis, Asian session live market analysis. And I have given the forecast for this particular week, so we'll review this forecast. So on Monday, we'll analyze the market and try to give the forecast. And Thursday, I'll review the forecast and see how far the market has moved as per the expectations or deviated from there, and what could be the further expectations for the weekend. That I'll explain it on Thursday. So I'll see you on Wednesday. Until then, bye. Wish you happy trading.